from your perspective, what does time in the market actually mean with an asset class like shares or the ASX?
I think that sort of boils down to what do we mean by long term? We always keep saying, invest for the long term. Well, from the data displayed on this slide, which is the Australian stock market from 1875 to 2017, so that's 140 years worth of history with all the ups and downs and all the sort of happenings that such a long time period would yield. We see that when it comes to sort of rolling returns over 8 years, rolling returns means that you're looking at successive periods of, say, 8 years. You take 8 years, then you take another successive period of 8 years and so on. So you divide up the 140 years into slices of 8 years at a time, and there are successive ones. We see that there's no negative period at all from 1875 to 2017 that has, in terms of rolling 8-year return, has given a negative return. There are a couple over 7 years and over 5 years, but based on this data, we would have to say that what we mean by long term, when you are sort of have a very high probability, almost a certainty that you will end up with a positive return, might not be exactly the return that you want, but you'll still end up with a positive return. I think it means that you have to have at least 8 years of patience in terms of holding your investment. And I think I did a bit of sort of, nosing around the internet with regards to global equities. Global equities, of course, the international market is much bigger than the Australian market. The Australian market's only about 2 to 3% of the global one. With international equities, similarly, if you hold your investment for 8 years, you have about a 98% probability that you will end up with a positive return. So the data here indicates, it's not a prophecy, but it indicates that when we want to have a successful long-term strategy, we have to be prepared to invest for 8 years or more.